Good day everyone, I'm Prasanna Kaliselvan here to give a little introduction on our group presentation. For this activity, our team chose 7-Eleven and MYNEWS store to compare their balance sheet analysis and also income statement analysis. So let's go to the first question. For the first question, as you all can see, I'm going to explain from the 7-Eleven's balance sheet analysis. So for the first of all, we're going to look on the asset perspective. So first, for the property and plant equipment, the graph show that it's upward trend. So it means it's gradually increasing every day, which every year, which is showing the ongoing investment in physical asset like stores and equipment. Followingly, for the right of use asset, we can see the graph is slightly increasing in 2022 and then a decrease in 2023. That indicates some of the new leasing followed by a possible store closure or lease termination. And when it comes to inventories, there is a sharp rise in 2022, then a drop in 2023. That reflects the overstocking followed by a better inventory control or might be a lower sales volume. And then maybe it also caused due to COVID, because 2020 until 21 it was a recovering of from COVID-19. So there are possibilities of side effect of pandemic caused this graph to be rise and drop. And then following by the trade and other receivables, there is a big jump in 2022, then a little fall in 2023. It shows that there is a looser credit in 2022, then a strict collection in 2023. It's a good sign of a growing inconvenience store financially. And last but not least, for the asset, the cash and bank balance shows a strong upward trend that indicates that cash flow is more quadrupled from 2021 to 2023. That shows a major increase in liquidity. Followingly, when we look on the liability, the borrowings graph shows that a steady increase on each year, which shows a more reliance on debt to fund the business needs. And followingly, for lease liabilities, there is a rise in 2022, then a slight dip in 2023, shows that a stable leasing activity, possibly store reorganization. And also for the last part of liability, trade payable, the graph shows there is a big increase in 2022, then a drop in 2023, shows that a rise in supplier credit followed by more prompt payments or a lower purchasing could be happen in this graph. And last but not least, for the equity part, share capital graph shows that a stable in 2021 and 22, then a decrease in 2023, shows that there is a share buybacks or restructuring. And then last but not least, for equity, the retained profit graph shows a strong upward trend that more than 5 times growth from 2021 to 2023, shows increasing profitability and earning retention.
Hello, doctor, and my fellow friends from Group Number 7, this is Shawad. On my part, I will analyze under the balance sheet analysis on MYNEWS of BERHAD. So, from the finder, I found four points that you can see the trend, whether it's upward or downward. Okay. First of all, I would like to highlight on the non-current asset in the property, plant, and equipment. We can see from this trend, 2021 until 2023 is upward. That means when we show that the business want to expand the business, one whether it's buy the property, create a new business plan, and also the new equipment. Okay, the second is under the current asset. It's now it's non-current asset. So current asset in the inventory. Inventory also we can see from the 2021 until 2023 is upward trend. That's meaning, which is mean when the business increase the inventory, it shows that the business are ready or available to meet the customer needs because they are keep their inventory to fulfill the customer needs or available to customer delivery. Okay, the third is liability. Under the liability is current liability is a trade payable. It shows that from 2021 until 2023 is upward trend because we can see, as we know, when the trade payable is increased, that means the payment from the supplier is keep increase. This means they are not delay from the supplier payment. So number four is from the return earning. In the minus holding BERHAD, you can see the decline trend from the 2021 until 2023. It shows that minus holding BERHAD faces challenges with the operational because, as we know, return earning shows that what the business what the strength of the business is. Okay, moving on. Right now, the topic is we can see the comparison. We want to see the comparison between the 7-Eleven Malaysia Holding Berhad and the MYNEWS Holding Berhad. Okay, let's take a look. Okay, right now we can see the comparison between the assets first. So asset, we decide to have a non-current asset and the current asset. For the property, plant and equipment and the right of use asset is a non-current asset. So for the non-current asset, especially inside is the property, plant, equipment is a 7-Eleven shows by the expanding their business area. And my news avoid to increase the PPE by keep their cash. For the right of use asset, both company avoid to increase the ROU. Okay, we move on the current asset for inventory. Strategy inside different different with 7-Eleven. Minus continuously increase their inventory to keep more suppliers. It means keep increase their inventory to readiness to keep the customer need available where customer needs the product they have. And we move on the trade and other receivables. Strategy inside is different with a minus. Several increase the receivable by business customers. And last for the current asset is the cash and bank balance. Several get to a lot of cash over the 3 years period. But for the minus had a challenge to generate the cash. Okay, we can say the second is from the liability. From this liability, we decide to see the four key points, which is one from the non-current liability and two from the current liability. If we go for the non-current liability, is borrowing. Okay, so the find out from the comparison is that most a company shows that they rely on the debt to the running the business. Okay, the second is from the current liability is risk liability. So the comparison is both company shows that keep the risk liability to keep liability to avoid the reduce their cash. And the last for the current liability is trade payable. The increase of the trade payable is from the delay of the supplier payment. Okay, we can see on the comparison in the equity. For the both company, we can see on the share capital. So the find out is a injection fund from the shareholder can increase the company growth. That means the funding money from the shareholder that influence on the business operation. And the second is we go to the retained earning profit. So we found out that 7-Eleven get the profit to strengthen the growth business. The trend is upward from the 2021 until 2023, and different with the MYNEWS is return earning from the MYNEWS shows that operation business of MYNEWS get not enough money because the trend is significantly decline from the over the 3 years period.
The second part of the presentation, we will talk about the income statement analysis between 7-Eleven and MYNEWS. Starting with revenue, in 2022, 7-Eleven saw a strong rebound post-pandemic with reported revenue jumping up to 34% or 3.76 billion. This included the now divested Kevin Pharmacy segment. After restating the numbers under MFRS 5, the 2022 revenue for continuing operation was 2.48 billion. In 2023, the revenue slightly rose to 2.78 billion, a 12% increase from the restated figures. This reflects a strategic shift to focus on the convenient retails after disposing the pharmacy business. Next, cost of goods sold or COGS, which move in tandem with revenue. After restating, 2022 COGS was 1.69 billion, rising up to 1.92 billion in 2023, which an increase of 13.7%. This increase was driven by higher sales volume and same-store sales growth of over 9%. There is also an increase in depreciation of 7-Eleven, where the depreciation for the continued operation actually climbed from 164.1 million in 2022 to 181.9 million in 2023, which an increase of about 10.8%. This was due to capex on store expansion, logistic improvement, and digital upgrades. On the expense side, selling and administration costs also rose sharply due to minimum wage hike and longer store operating hours, which increased the use of utilities. For the pharmaceutical segment, however, when in tandem with increase in managed property revenues also lead to the increase in selling administration expense. 7-Eleven also has opened 18 new stores in 2022 and 130 new stores in 2023, which adding to the operating cost. Finance costs also showed slightly increase of 6.9% from 2021 to 2022 and 9% from 2022 to 2023. This is due to lease liabilities as well as interest from 100 million medium-term note insurance. 7-Eleven reported net income increased from 84 million in 2022 to 270 million in 2023. However, this is not an operational profit as the spike came from a one-off gain of 284.6 million due to disposal of Kevin Group. The actual performance from continuing operation was a net loss of 40.5 million, a 143% drop compared to 2022 profit of 33.6 million. Strategic divestment of the pharmaceutical segment may enhance long-term focus, but it affects short-term profitability, which can be seen in this 7-Eleven income statement.
Hi guys, my name is Wei Ching and I'll be talking about my news financial statement itself. So we're going to start with the revenue for my news BERHAD over the past 3 years, which is from 2021 to 2023. And actually we can see that they have a positive and consistent growth trend itself. So it started from 2021, my news actually recorded a revenue of 394.4 million. This was actually due to the pandemic period where actually retail business was quite slow and was impacted by the COVID itself. So by 2022, it was seen that their revenue has slightly recovered, where they were able to gain about 631.3 million, which is about 60% increase of growth rate. This sharp increase was mainly due to the reopening of the economy after COVID-19 restrictions were relaxed, which actually helped bring back customer traffic to their stores itself. So by 2023, right, the revenue actually continued to grow further to 730.2 million, which is about 15% increase from the previous year. Although actually you can see the growth was actually slower compared to 2022, it still reflects a strong performance itself. So from here, right, this steady growth was actually supported by their internal strategies. For instance, MYNEWS itself actually is expanding their business through CU convenience store brand, at the same time improving their food processing center operations, which actually help them drive their sales growth at the same time operation efficiency improvement. Overall, we can see that MYNEWS revenue growth has proven their ability to adapt and recover from the strongly post-pandemic period itself. Next, we are moving on to the cost of goods sold, or I will call it COGS for the MYNEWS itself. So we can observe that COGS also shown an increasing trend from 2021 to 2023, which actually is expected because higher sales usually also lead to a higher cost, right? So in 2021, COGS was around 273.9 million. But by 2022, it jumped significantly by 53% to about 418.9 million. This was mainly actually due to the post-pandemic recovery where sales started to pick up as more customers returned to their outlet. All right. So actually by 2022, the COGS further increased by 13.24%, which is about 474.4 billion. Although it can be seen that the growth rate was lower than 2022, the cost still actually went up because this is due to internal expansion. Particularly, they are actually focusing on the opening of more CU outlets, and the operation of their food processing centers contributed to a higher raw material cost and operation expenses itself. So overall, right, we can say that the COGS increases reflects both internal strategies like expansion and external factors like the retail market recovery after COVID-19. All right, now let's continue and let's take a look at the depreciation expense of MYNEWS over the last 3 years. So in 2021, from this graph, total depreciation was about 56.3 million. This figure increased by over 21% in 2022, which is about 68.2 million. And you might be thinking why. This is mainly due to the company opening new stores and upgrading their retail infrastructure after the pandemic, as mentioned previously. So by actually 2023, their depreciation actually uh, improved a lot again by 17.7%, reaching about 80.3 million. This was largely because of their ongoing expansion, especially in their opening of CU convenience stores network and their full-scale operation of their food processing centers. Other than that, another major contributor was the increased use of right of use or ROU assets, which these include leased retail space and equipment which are depreciated over time under accounting standards itself. So overall, the rise in depreciation shows that MYNEWS has been heavily investing in its physical infrastructure to actually grow its retail footprint. While this increases expenses in the short term, it actually also supports their long-term growth and brand presence for the long term itself. Now, looking at the selling and distribution expenses for MYNEWS has shown a steady increase from 2021 to 2023 as well. So in 2021, these expenses were actually shown at around 85.4 million. By 2022, there was actually a sharp jump of about 49% to which is 126.9 million. This was actually mainly because of the company reopened outlets after the pandemic and the increase of their marketing efforts to attract customers back to their store itself. Then by 2023, selling expenses rose further by about 13%, reaching 143.2 million. This was in line with their continuous expansion, especially for CU outlets, which actually lead to a higher staff salary, promotional campaign, and logistic costs to support their growing operation itself. So in summary, right, the increase in selling expenses was influenced by both internal strategies like expansion and marketing activities and external factors like the retail market recovery where business needed to spend more to stay competitive and to meet customers' expectation itself. All right, so let's continue to the interest expense or it can be called finance cost itself. So in 2021, right, their interest expense was around 6.4 million, as stated in this graph itself. So this amount actually has increased sharply by 38% by 2022, which is about 8.8 million. The main reason for this was because MYNEWS took on more borrowings to actually support their business operation, especially activities like opening the new CU outlet and running their food processing center. So by 2023, interest expense rose further by 28%, reaching about 11.3 million. This increase reflects their growing financing needs as the company expands further. Internally, this was due to their strategy of borrowing more to fund expansion. While externally, right, rising market interest rates over the year may have also actually contributed to the higher borrowing cost itself. So overall, we can see that the interest expense increase shows that while MyNews is actually expanding aggressively, it also comes with higher financing obligation itself. Lastly, let's look into the net profit or loss of MyNews itself. So in 2021, MyNews actually recorded a high net loss of about 15 million, mainly due to the impact of the pandemic on their retail business. However, by 2022, they managed to actually reduce their losses significantly by 53%, bringing it down to 23.6 million. This was actually because of their retail performance improvement after the economy reopened and customers' spending started to recover. Then by actually 2023, their loss further reduced by another 35%, which is about 15.4 million. This actually shows that their expansion strategy, especially the CU outlet and the food processing center, are starting to give positive result for that. And for the strategic impact, internally, MyNews actually focus on improving their cost efficiency to minimize losses. Externally, the market recovery after the COVID-19 definitely has helped boost MyNews sales and performance itself. So overall, even though they are still making a loss, the trend shows continuous improvement. And if this momentum continues, right, MyNews has the potential to return to profitability in the future.
Lastly, we will discuss the key comparative highlight of 7-Eleven and MyNews income statement from 2021 to 2023. So what can we analyze from 7-Eleven and MyNews in terms of revenue, COGS, and depreciation? 7-Eleven will focus on core retail by divesting Kevin Group, while MyNews is expanding with new brand and store format like CU. 7-Eleven increase in COGS is in line with the increase in revenue due to same-store growth, while MyNews COGS is affected by the food supply costs. Both 7-Eleven and MyNews are also invested in infrastructure and expansion, which lead to higher depreciation.
Hi guys, I will be talking about the last three components, which are the selling and admin expenses, finance costs, and net income in comparison with the 7-Eleven and MyNews. So let's start off with actually the selling and admin expenses itself. So for this category, both companies actually experienced an increase from 2021 to 2023, mainly due to the rise in minimum wages and business expansion activities. For instance, for 7-Eleven, the increase was driven by a wage hike and extended operating hours across their outlets. Meanwhile, for MyNews, right, the higher costs were largely due to their aggressive CU outlet rollout. Additionally, staff costs, logistics, and premium store formats, it actually comes with a higher fixed cost. So actually, in short, right, both companies are facing higher expenses, but MyNews is slightly more impacted due to its premium retail model and rapid expansion strategy. All right. So then the next one we're going to talk about is actually the finance costs, or people will know it as interest expense. So we can see that 7-Eleven has been more stable in controlling their debt. Their financing cost was mainly influenced by lease liabilities and MTN insurance itself. On the other hand, MyNews recorded a faster increase in interest expense. This was due to higher borrowings to fund their outlet expansion and the operation of their food processing center itself. Strategically, this shows that 7-Eleven maintains tighter debt control, while MyNews may face higher financial leverage risks as they continue expanding. Lastly, we come to net income itself. Finally, when we look at net income, 7-Eleven has consistently generated stable profits from 2021 to 2022 itself. However, right, there was a noticeable spike in 2023, but this was due to a one-off gain from disposal of Caring Group, not from core operation. As for MyNews, they are still actually facing losses over the years, although the losses are narrowing down lesser and lesser. This is actually because they are still in the reinvestment phase, focusing more on growing their outlet and building long capacity rather than short-term profits. All right. Hi guys, to conclude this slide, 7-Eleven actually focuses on stability and profitability while MyNews is in a reinvestment phase, prioritizing growth through expansion. So in conclusion, 7-Eleven actually maintain a steady net income and control costs better, whereas MyNews actually can see a higher expenses cost and interest due to rapid outlet and production expansion. So overall, both companies actually shown progress, but with actually different strategies, which are 7-Eleven is playing it safe, while MyNews is investing heavily for their long-term growth itself. So that's all for our presentation. Thank you for listening.